Are you looking to grow your wealth with smart, reliable investments? Well, mutual funds can be an excellent choice for both beginners and experienced investors. But how do you get started? What's the best way to make your money work for you? In the next few minutes, I'm going to share with you the top 5 tips that can help you make the most out of your investment in mutual funds. Stick around till the end to ensure you're on the path to smarter investing. Before jumping into any mutual fund, it's crucial to understand your risk tolerance. Are you someone who can withstand market fluctuations, or do you prefer stability? Different mutual funds come with different levels of risk, from conservative bond funds to more volatile equity funds. Understanding your comfort level with risk will help you choose the right type of fund that aligns with your financial goals and peace of mind. One of the biggest benefits of mutual funds is diversification. Instead of investing in one stock or bond, your money is spread across a wide range of securities. This reduces the risk of losing your investment if one company or sector underperforms. It's a simple strategy, but incredibly powerful. Remember, don't put all your eggs in one basket. Every investor has unique goals. Some are looking for short-term growth, while others want steady, long-term returns. It's essential to choose the right mutual fund based on your objectives. But if you're saving for a down payment on a house, a more conservative bond fund could be a better choice. Understanding your goals will guide you toward the right investment mix for your situation. FEs can eat away at your returns over time, so it's important to pay attention to them when selecting a mutual fund. Look for low-cost funds with reasonable expense ratios. There are 2 main types of FEs: management FEs, which pay the fund manager, and expense ratios, which cover the operational costs of the fund. The lower these FEs, the better your returns will be in the long run. Always review a fund's fee structure before making your investment. Mutual funds are designed to be long-term investments. While market conditions might fluctuate, staying invested can help you ride out the ups and downs. Avoid the temptation to sell during market dips, as this often leads to poor investment decisions. Instead, focus on your long-term goals and allow the power of compound growth to work in your favor. Patience is key when it comes to mutual fund investing, and that's it. By following these 5 tips, you can start building a solid foundation for your investment in mutual funds. Remember, it's all about understanding your risk, diversifying, setting clear goals, keeping FEs low, and staying invested for the long term. If you found this video helpful, don't forget to hit that like button and subscribe for more tips on smart investing. Thanks for watching, and good luck with your mutual fund journey.